Last week, the Public Investment Corporation, South Africa's largest investment entity, upped its exposure to industrial conglomerate Remgro by almost 45%. The PIC is by far the biggest shareholder in Remgro, with no other shareholder holding a stake above 5% of the issued shares. However, the Rupert family, via its holding in Remgro's Class B ordinary shares, still controls Remgro. Let's start with you, Deryck. This is a highly diversified large cap stock, and it's the only investment holding company that invests in both listed and unlisted companies. On the listed side, we've got the likes of Implats, Mediclinic, RMB, and the unlisted, of course, includes Total, Kagiso, and Unilever. But because it virtually holds less than 50%, it exerts no control, which begs the question, should we even look at headline earnings when we consider the likes of Remgro?
Look, I think at the end of the day, exactly what you just stipulated there, this is a very diversified play. So if you're coming into the market and not quite sure where to get your fingers wet for the first time, you can argue, do you go into a single commodity play? Do you go into a one business entity that operates in one specific fundamental, and that's what they do? Or do you go into a diversified play, something like Remgro, because you're getting a range of assets? So my personal opinion, after some analysis and looking at the assets that you've just stipulated that they have in their portfolio, and just looking at a basic net asset value valuation, is a fundamental reason enough for me to say, yes, Remgro to me is an attractive asset. And let's have a look at what it's done over the years, and specifically through the financial crisis and on the lead up to where we sit up today. And it's delivered a stellar performance. It's got a strong dividend of about 3% at this point in time. And fundamentally, I do like the stock. And I think just at this stage, it's really that net asset valuation that stands out for me, that gives it a strong fundamental buy at this point.
Well, Remgro's always traded at a discount to its net asset value. And you probably have more updated statistics, but as at 31st March 2011, the discount to NAV was 18.2%.
Yes.
Why has it always traded at this discount, first of all, and does the discount generate a return for shareholders, which I think is a more important question?
Well, look, I think, when you value a company, you've actually got two components that you look at. Basically, you can look at net asset valuation in terms of what the raw assets that they hold in their book, or you can look at cash flows. So now if you look at it from a cash flow perspective, that gives it its underpin at the price that you're seeing. So again, look at the capital gain that you've experienced in the stock over the last 3 years, and look at the dividend, and it sits on a yield of about 3%. Now, that cash flow is another way that you can evaluate the company, and because of that cash flow sitting at about a yield of about 3%, it's not a strong enough buy to give it that pop-up above that net asset valuation. So the net asset valuation is merely just a nice flaw in the share price, if that's, well, I wouldn't say a flaw, it can go through there, but I would say it's a nice comforting buy, if that makes sense, knowing that you're tying yourself up into a 3% yield per annum, as well as the potential for some strong capital gains. And we've seen that management have always done a stellar job in doing acquisitions and disposing of assets at some good times, and obviously looking at really capitalizing on some good capital growth within the portfolio.
We'll carry on with the fundamentals. I know you've got quite a bit to say, and it's very, very good to hear from you. But let's bring in Yonatan now at the technical wall. Let's start with the bottom part of your chart. Just looking at the volume picture, it's steadily increased since July. What is the significance of this increase in volume?
Well, this forms the basics of technical analysis, Refilio. I mean, Charles Dow, one of the great technical analysts of our time, said that one of the basic tenets in order for an uptrend to continue or a downtrend to continue is that volume needs to confirm the trend, meaning that if prices are steadily moving up, in order for that trend to continue its current form, volume needs to steadily increase, meaning more and more buyers coming into that market. And that's exactly what we've seen since August of this year. Up until now, we've seen a steady increase in volume, prices moving up nicely, just a little bit of struggle getting past that 114 Rand level, and only, again, first breached it in October of 2011, came back down very quickly, rebroke that resistance, what now support level, and now only recently back above that. So I think this can continue moving upwards. It looks very positive, and we should see higher prices in the future.
But we're seeing a rising 200-day moving average there, and the prices keep bouncing off it. Since February 2011, prices have been hovering around that 200 moving day average level. Is there great support, though, for that level?
It's unbelievable support. They call the 200-day moving average the ultimate support, both in support in a bull market and ultimate resistance in a bear market. And we've seen that prices over the last year, from November last year until now, really struggling to stay below this 200-day moving average, which means that there's a hell of an amount of support, a hell of a lot of buyers at these levels, and what doesn't go down must go up.
Must go up. Deryck, let's come back to you. This is quite a popular stock, but some investors and potential investors are put off by the fact that it's got such a huge weighting in First Rand and RMB holdings. This was a similar concern when they held BAT shares, but they unbundled that stake obviously in 2008. Do you share these concerns around the heavy weighting in RMB, and what would the impact be if they unbundled their financial services interests?
Well, I think it was a concern prior to the unbundling of the RMI stake and obviously looking at the First Rand picture. But looking at it now, Remgro are very strategic in their movement. So now you've seen the unbundling take place. You've got the constituents of RMI, RMH, First Rand, and now they sit in a position to say, do they upweight in these stocks? Do they downweight? Do they sell off some of their exposure and look for other opportunities, whether it's listed or unlisted? And again, comes back to that diversified picture that you get when you buy a stock like Remgro. So I'm not actually put off purely because of what's gone on with the unbundling in terms of the insurance side of the business, and particularly in the First Rand side. So where we sit now, I think management are quite comfortable in terms of the valuations that you see in each of those businesses, and they do show some good potential upside fundamentally. So in time, it might be a question for them to say, do they downweight and look to expel the money into different areas of the market? But this is what they know. And this is the area that they know best. And they understand the valuations of these businesses. They understand the growth potential that's going forward. And really, that's the only way that you unlock value in a share is the prospects. So I think the prospects looking forward do look good in these companies. And again, looking at base case example in the RMI, the yield is very attractive. So in terms of delivering cash flow to the investors in Remgro, it's a nice underpin to their dividend that gives it that cash flow that they need.
I'm glad you mentioned the dividend, Deryck, because something that made me feel a little bit upset is that they managed to keep their cash position as strong as it is because they essentially pay out less in terms of dividends than what they receive from these interests. But the dividend payout have reduced substantially since the BAT unbundling in 2008. What is the outlook for dividend? And then tell us whether you think it's a hot stock.
Well, look, the outlook for dividend is positive. In my sense, the dividend obviously, has had a bit of pressure, but looking forward, I think it does look good. And I think that there has been a lot of restructuring that's gone on. And just remember that when you sit with a portfolio of assets, they essentially sort of manage a private equity type business where they invest in many different components within different sectors, and they've got to then manage the acquisition side of it as well as the release and the sale of those acquisitions.
I really hate to cut you short, but I have to come to you for a call and say hot or not for you, Remgro.
It's definitely a hot stock. I think where it sits at the moment, it's maybe rallied a little bit far. Use that technical support upward trend as a buy entry into the stock.
Use it as a buy entry into the stock, says Deryck. Yonatan, do you echo the sentiment, yes or no?
I completely agree with Deryck. I think it's a hot stock. I think the risk-reward ratio is very much in check. 114 Rand is a great support level. Look for a top resistance, 125.
Fantastic. Moving on now, Arcelor Mittal's released a disappointing set of results for the third quarter ended 30 September. Some of the highlights, or should we say lowlights, were a headline loss of 460 million Rand and a headline loss per share of 115 cents a share against a headline profit of 473 million Rand or 118 cents a share in the previous quarter. Now, Yonatan, just so I don't slit my wrist before the end of the show, I have a little bit of nostalgia. In June 2008, the share price of Arcelor Mittal peaked at over 250 Rand. But when the bottom fell out of the steel market after that, the price fell to under 100 Rand and is currently hovering around the 60 Rand level. Can you take us back to the good old days? Please say you can, and don't confirm that bearish trend, I beg you.
Unfortunately, I can't be the bearer of great news. I mean, look, we've got to be consistent here and go with the trend. The trend is your friend. The trend is clearly on the way down. We've seen this massive downward channel range between 81 Rand 50 and 54 Rand 10. It's kind of hovering in the lower quadrant of this channel. 200-day moving average pointing downwards, which is suggesting that the overall long-term trend is still bearish. So we could see lower prices. But having said that, we've got the short-term support at 54 Rand. We've got a bit of resistance at the 64 Rand. So again, I'm not looking, this is not looking so great for me.
Not looking so great for Yonatan. Deryck, something that also isn't looking so great is the outlook on the steel industry. And last week, with the effect from the 1st of November, essentially, Arcelor Mittal raised the price of steel, rather. Flat steel would increase by between 3 and 6%, and long steel products would increase by between 4 and 8%. Give us your take on this and what your outlook is for steel.
Look, I think it's not a pretty picture, and just before I get to that, I mean, at the end of the day, the chart always tells you what the fundamental picture is. So, the chart is not a pretty picture, and there's definitely an overhang. There's been an overhang since the Kumba iron ore pricing issue. They've still got further issues at the moment, which you're going to see some clarity on the 15th of December regarding the right. And then again,
this is for the Sishen mine.
For the Sishen mine. Yes. And again, just looking at the steel outlook going forward, it's not a very pretty picture. Although you do see demand for commodities coming out of the east, the demand for steel, I just don't think Arcelor Mittal is in a very good position to benefit on some good margin management. You've seen the numbers, the losses that are coming through on the company, and you probably find that a lot of the bad news is probably in the share price at this level and under 60 Rand. But I still think it could consolidate under that 60 Rand level for some time. So definitely not a space where I'm going to look to call a hot stock at this point in time.
Well, let's bring in more doom and gloom, Deryck, now and chat about the raw material cost pressures that they're faced with. Current estimates is that they move from around 1/3 of the cost of producing 1 ton of steel to around 2/3. They're looking at setting up an iron ore mining operation in the Northern Cape because the company believes that that could potentially circumvent some of the problems with respect to raw material costs. Do they have the skills and expertise to actually go ahead with this, and can they turn around these issues with the raw material costs?
I question it, and I think that there's a lot of politically placed people that can help them to do an acquisition like that. But we can only speculate about that. But at the end of the day, you ask a very good question. Do they have the skills to look to expand at the rate that they want to expand? And secondly, can they actually afford to expand given the financial picture that they're undergoing at the moment? And my answer to that is quite simply no. I think they're being a little bit aggressive, and I think at this point in time they need to consolidate, and I think it comes down to a pure case of balance sheet and financial management that, margins are being squeezed and they need to cut down on costs and obviously, make a prediction on terms of where the steel pricing is going. And from there, you can look at hedging strategies and what have you to obviously give your share price a bit of an underpin at the moment. Picture not looking good. I think it might be a little bit aggressive in the position that they're in at the moment, but, any capex expenditure in that kind of a model is a little bit risky. In
August, they had a really catastrophic structural failure that occurred at one of the gas clearing plants at the Newcastle operation, which resulted in a partial collapse of the dust catcher, which had a huge impact on production, as we all know. Now, I don't know how you're going to feel about this, Deryck, but they're talking about celebrating the centenary of their Vereniging operations. I thought celebrating, when I look at people who are 100 years old, the last thing I think about is celebrating. I'm worried. Things are creaking and squeaking. And I guess the real question is, are they not potentially opening themselves up to the risk of another structural failure? And is a 100-year-old plant consistent with global norms?
Well, exactly. And they've got to meet, industrial standards, and they've got to understand that there's a lot of risk that comes with a centenary celebration, so to speak, of that nature. So again, there's got to be huge capex expenditure in terms of upgrading, implementing new systems. You also got to get the expertise. You got to get the skill set to really develop systems to give you a base to work off from where you are. And all of that comes as an expense. So yes, I completely share the same sentiment as you. And, I wouldn't say it's a celebration at this point. But again, I reiterate my stance on Arcelor. It's definitely not looking too hot for me.
Not looking too hot for Deryck. Yonatan, I suppose you're going to say exactly the same thing.
Absolutely. Long-term investors should not be looking at the stock for now. Short-term traders, again, things can happen in the market. We could see a move back down to the 54, bounce back up to 64 Rand. There's good money from a trader's perspective. But if anything, this is very short term. This is not for the long term at all.
Could you take us through those charts at the bottom, your oscillator, the RSI, and what we're seeing there?
Correct. Okay, there's two oscillators that we've got over here. They're both velocity-based oscillators, which means that it is measuring the velocity of these trends. And obviously these are leading indicators suggesting overbought and oversold territory. Both the RSI as well as the stochastics indicator are both in the oversold territory, which means that we could have a small respite in prices. So, I mean, it can tick back up to a little bit above the 64 Rand level. But again, you know, with the long-term trend so prevalent, I suspect that the resistance at 64.50 will hold and push prices back towards the lower end of the market of 54.10.
Resistance to 64.50 will hold. Deryck, just in summary then, I suppose you don't agree with the CEO when she says that they're expecting an improvement in the next quarter due to weaker rand and production back online. You don't buy that one bit, just like you're not going to be buying Arcelor Mittal.
No, exactly. I question it. So, yeah, I think it's a sort of a wait-and-see approach with a stock like this, but I'm not going to be committing my own money at this point in time.